Good morning, my friends. This is Darren Hancock, and here at the Breakfast Club on October 5th, 2023, we're looking at the markets, the S&P 500 live today. We're going to look for GBP, Euro. We're going to look at natural gas again real quick, Aussie dollar, New Zealand dollar. We're going to see them all today, kind of looking around, looking at gold and that as well. So stay tuned. This is non-farm payroll this week, so we are not participating. If you don't have your trades out by this morning, you could be getting yourself hung up. NFP, not for professionals. So keep an eye on your trades. Try to peel them out today if you can. If not, hey, do your thing, man. Go for it. Looking at the S&P 500 right here. Let's go down to let's start off with the British Crown. British Crown. Jesus. Okay, so this is the British pound right now on the daily. Move that up there. So we came back up into that fair value gap I mentioned a few days ago. We went through it, tagged it, came back up inside this order block. So it was a nice recovery yesterday. Today we came back up to the top of the fair value gap, and now we're pulling away. So now we're coming off the bottom of it, and we're looking for further downside on the British pound. Keep your eye on this imbalance down in here again, and then the rest of this fair value gap. Busy. That's where my eyes are going this week, or for the rest of the week. This was the reversal Thursday, so we're looking for a push down, either back into this order block. We'll see if this holds. I still feel like this has got more downside. This is a bigger draw on liquidity, I think, overall. So we're looking for another run back down below this low, potentially. If we lose the threshold of this little order block right here on the daily, if we lose this candle's midpoint or threshold, then we're going to continue down into the fair value gap on the daily. What does that look like for short term? Not that you're going to make a trade today, but this is the objective for today, this downside. Though we could run up into here before 10 o'clock or around 10 o'clock. We run up to here, fill this fair value gap in, get back to this breaker. Just dip into the breaker a little bit. We could get a return to this area down below. We have equal lows down here. So look for it to trade up into the high and then drive down. That's my call on that one today. Again, we're not really actually going to make any trades. Kind of like yesterday, we got out, kind of did some trades, but we kind of just sat on the sidelines. If you're looking at my price down here, I tried my bot out last night, some random time. I threw some, and it just completely traded caught the wrong swing and traded that for an hour and dropped my account by like $300 or something like that. Oh no, it was like $700. Yeah. So anyway, now I know not to put it on there. Our equal lows. So keep your eye on. We're in the consolidation here. If you're looking at the midpoint, we're just in the slight discount portion of this little consolidation here. I don't like trading consolidations, and if you do, you better trade equal ends of consolidations. If you're going to go long here, go short here. Pretty much where they're booking you anyway. Yeah, so that's British pound. Kind of keep your eye on this area. I'm going to put a little stop up here so you get to see what I mean. Right there. That's the kind of the range. So you're looking at 80 pips. 80, 90 pips to the next little rundown for the day. That's the kind of like the range I'm looking for. Unless they blast through this and just continue down into the range we're looking for. My guess is that'll be tomorrow. Would like to see it run through here, create a little pop back up into that, create an inversion gap right here, and then get short on the rest of the week. But it's NFP, non-farm payroll, so we're just going to sideline this and kind of wait. Let's get on to the usual thing I do around this time is get my go back to my channel, make sure everything's copacetic in case somebody turns up, does something crazy like, hey, says hello. Let's get on to the usual thing I do. Let me close that out there. There we go. All right, no one's here yet, except little old me. That's okay. This channel was just more of a record for me to keep my journaling my trades visually. So people are welcome to pop in anytime they want and have a look. But it's kind of what I'm looking for predictions, how I'm looking to read the market, and you just get to look over my shoulder and enjoy or observe how I trade, and then you can do your own thing, follow along with me, or agree or disagree with my analysis. That's fine too. Remember, ICT is still out there till November. Capitalize on them. Take them, guys. Watch what that guy's got to teach you. Amazing stuff. And if you want to get anywhere near the quality of trading or earn the kind of income that you can earn in these markets, he is the guy to talk to. He's the guy to get all your knowledge from, then come back here, and here's a place where you can make mistakes and you have a comfortable environment. You can share trading ideas. No one's going to hack on you. I want to run this just so that everybody's got a fun place to hang out. You tell a few stories while we're waiting for the market to do their thing. That's what the Breakfast Club is all about in the morning, which reminds me I should probably open it up this morning. Start my call. And if anybody turns up, great. If they don't, no biggie. All right, let's move on to the euro. Euro is pretty much in the same situation on the hourly. We're looking for upside, also return to new week opening gap, and downside, looking for a return back into this breakaway gap we had here. As soon as we broke this market structure to the upside with a bull candle and a fair value gap, we returned back into it. You got your 3 levels of trading also inside a daily fair value gap. Come back to the edge of that if you want and use that as your entry. Stop loss goes below the candle that creates the fair value gap, which would be down here. And you would have been a nice little squeeze, but in the end it came back for you and you continue up with the objective being the upside here. So you've been banging around in this for hours and hours and hours since since yesterday morning. That was the New York Open right there. Came back down and then you'd be up here. So you could scale out a little portion there, and then in here, aiming for that fair value gap high, new week opening gap. Anywhere inside that new week opening gap is to fill the rest of the little fair value gaps there on the hourly. I'd like to see this drop in here one more time before the run up. That's what we're expecting pound to do. So look for those areas. So let me put my little yellow boxes here for the rest of the day there. Let me just run these lows out here. I ran those low highs. So that one candle ran the lows, ran the highs. Now it's sitting in the middle, or it's still sitting in that consolidation. This is kind of, I think Same thing. It's the same thing for Euro as GBP. GBP may make the run first. So if this pulls down in here for GBP and this retraces, this one tends to follow along with the British pound, or used to back when I was trading it. So yeah, we're in a consolidation. So again, NFP, stay out of the markets. Just observe today and tomorrow. Get a good feel, good read. Look for PD arrays. Same kind of setups. Paper trade this unless you're super confident, or you're a good gambler. Whatever the case may be. Look at that. Well, there you go. Yesterday we got the price leg I was calling for on the Canadian dollar 3 days ago. That was the price leg. We hit that objective yesterday afternoon. Proof that price legs do work. I'm going to hold that in there in case I have to review that again later. Look at that. Gas, natural gas, yeehaw, keep on going. Natural gas, we're looking for that one to get on top of that weekly fair value gap, or at least come back to this line at 306 and then start pushing for higher prices. So if you have a natural gas play in whatever country you're in, then I don't know what it'd be like in Europe, but I know in Canada and the US, with prices down as low as they are, this is a good opportunity, an extreme discount to start getting back into some liquidity. Natural gas isn't going away for a while, so all those people that are against natural gas, the world's not going to change that fast to get back over to green energy efficient fuel. With way too much fossil fuel burning stuff going on out there, the transition is coming, albeit slow. And I'm not here to debate any political reasons why this is a good play. It's just, it is what it is. It's the play you can keep in for more of the long term. This is not a short term play. I definitely believe that it's got some potential. I love these lows up here. I love 50% of this range here. That may take a year or so to get up there, or we may just get big bold candles like this and get up there within a month or so. As you can see here, this was February to May. So March, April, May. So within 3 months we gained $5. So $5 gain here would be up in here. So just over this year alone, we could be getting back up into that 50% of that range, which would be quite nice. This is the price leg I was calling, back in August. That's the price leg, and we just hit that yesterday. So again, proof that price legs do work. This is what we're calling for in Australian dollar. We have a return to price imbalance. We're pulling away from it now, looking for more downside. What have we got for downside? Well, we've got this threshold, these equal lows sitting right down here, and we have the midpoint, which we just bounced off of the mean threshold of this down close candle, or breaker. Last down close candle is the parent breaker for this entire run up into above this old high. There's a swing here, so it's the parent breaker for this run here as well. So there is your breaker. We're reacting off it. Now are we going to continue to push through this, reach down into the rejection block, and eventually the lows? Who knows? Keep your eye on these equal lows right here. If we run those, look for a sweep of those lows, and then are we going to run back up above these equal highs here, or are we going to run down to the rejection block? So kind of one of two scenarios to look for. I do like the opportunity to continue to run down in here into perhaps October, November, December, and then the big December run up. Though we can get times like this where we get October and it runs all the way back up. We get that little dip in December and then the pump up here. So we could see this start to run back up right into these equal highs by the end of the year. If this holds. We sweep that low, and then when there's just a wick does the damage, wick comes down, body respects that threshold, and then starts to pump back up for the rest of the year. That would be my journal type idea. Whether or not it comes true, there's lots of things that have to come to fruition before that occurs, but that's visually what I'm trying to look for right here. Sweep this, bodies of the candle respects this on the weekly, and then we pump up. Either respects it, meaning it'd be above it or on it for the threshold, mean threshold, and then a return to higher prices. New Zealand dollar, look at the difference between these two. This is the daily. Losing. Australian dollar, daily. Holding its price, really staying in that consolidation. Just swept these lows down here, pulled back into the breaker. Last stop close candle before run below old lows. So here's your breaker. We've come back into it, tagged it. Are we going to follow through and continue to push through it now? We've also hit coming up for the 50% of this range from here to here, which we drew yesterday. Here's your objective now is we've hit the bottom. Next part is the open of the breaker. If we get that, and then we get react off of that, look back into this fair value gap. SIBI on the downside as an inversion fair value gap. If we get on top of this and then continue to push through the 62% retracement of this breaker, then you're looking for upside. Then we've got this more strength in the New Zealand dollar to continue to push for higher prices. So we need to see this on a close sometime this week, above a close, to give me an idea that, hey, look, I'd like to see a retracement. Even if we don't, even if tomorrow we finish above here, and then tomorrow we retrace back into the inversion fair value gap, and then start pushing up next week and see how we will react off the rejection block, the halfway point of this candle here, and then the high. That's my ideas for that one. And if we continue, because of these are relative equal lows, we may get a reaction. Here's the opposite side of this. If we get the pump off of the low or the open here, we get a pump off of that and drive back through this inversion fair value gap. So I'm going to put this in here, just again a little journal entry, so I said it, so I know it was talked about. This becomes your inversion fair value gap right here. The moment we get on top of it, this is the foothold we're looking for to continue up to drive through here. This is your line in the sand for your bears. If we want this to continue back down and run these lows out, this better hold price on a close. And I don't, my general rule is I don't like to see 3 PD arrays in a row run with one candle. So we've just hit 1 here on this day. Now we're going to come up 1, 2, and if we drive through that 3, then you start to lose a level of strength. So you kind of got to look at it as weakness, stronger, strongest reaction. So this is a good example. So we ran up, tagged it, and then quickly pulled away from it and ran these lows out. So that first little PD array you're looking at right there off the low was the strength. And when you come back to it again, okay, does it react off of it again with that strong breaker? or the body. That's the next one. If it hits that one, great. We get a nice strong reaction off of it. We could come back down again, aiming for these lows. And if you push through here, it's a little weaker, but it is an area of potential strength, or last line of strength, before we run back down into here. So if we drive up into here, get back to here, push through, or drive to here, turn around, blow right through this, come back to it, and then finish off with a low. So those are the two different scenarios I'm looking at for New Zealand dollar. Again, I'm not looking to trade these just yet. Yes, we've been calling it like gangbusters here, but not looking. I want something a little more long term for these guys. I want to catch these guys for a long month. A run back up into all this stuff, into 50% of that range would be a long run. And according to our spreadsheet, New Zealand dollar, New Zealand, oh, I haven't put it in yet. New Zealand dollar, not sure if that, what does Aussie dollar got? Aussie is long. Well, that's GBP. Aussie dollar is short. If you're going to get a swap, you're going to carry it over a long period of time, over a day. You can only get a positive swap in a short. So New Zealand dollar will probably be the same thing. You'll probably get a long. If you're going to go short, you can hold your swaps and actually get paid for your trade over a period of time. Excuse me. Oh, somebody's in the house. Hello and welcome. Welcome, my friend. You can go over to the side there and say hello if you like. The little chat bar. Put a little happy face or something. Thank you for turning up. I hope you get something good out of this today. If not, thanks for popping in. Eek. Let me go to something a little more taste without all those indicators and that on it. We ran up into breaker. Last up close candles. You combine these two together. Last up close candles before run below old lows. We've run all the way back up into them. Let me get this guy out of the way here. Come on. Look at that. Right inside it. Bingo. Inside the breaker. Now we reacted very nicely off of that. And now we're looking for a run down. Oh, this is on the minute. Okay, let me get you a little bit further. Let's start from the daily. Let's get this thing out of the way here. Clean that up. There we go. This here is the fair value gap on the monthly. So when you see my pink one here is, or this pink box is actually the monthly fair value gap. The gray one is the weekly, and blue, which isn't in here, even though this, when they overlap, unfortunately they change to this color. But the blue is the daily. So when you're looking at this daily one here, we're looking at, there's no fair value gap inside here in this range. Let me make this a little bit bigger so you can see what I'm talking about. So we are inside the range of the fair value gap on the monthly. We've come to the bottom of it. We've reacted off of it. And now we're coming inside that weekly one. We went through it. Now we're inside it again. We wicked through it. And we are looking to do what? I'm not sure. I can't really see a heck of a lot here other than a return to this order block here. Is that, let me see what the low is on this one. The low is 61.89 and the high on this is 72. Oh no, so this thing actually has a wick down in here somewhere. Okay. Halfway point of that wick. Look at the halfway point of this wick right here. That's providing some level of retracement. So I like the halfway point there to continue on the downside. I still believe we're going to continue working this S&P down. if we look at this on the grander scale, look back in here. You see this little pocket back in here? Cut through candles. Equal highs. And we got a little price imbalance. So look for these as inversion gaps right now. Are we going to eat through those? We've come back into them. Are we going to eat through them and continue down? Or are we going to pull back into this monthly fair value gap? I do believe now that we've got through this weekly, we've got some support off of that. We've pulled back into it. Now, do we get a level or a measure of support here and continue to pull back into this range? Or are we just going to roll over here now and continue down below this and use these inversion gaps? So this monthly, if we get below it, come back into it here and then drive back down again, this monthly now becomes the inversion gap to continue down for lower weekly prices. There's another fair value gap here on the weekly. If we start to rock through this, come back, find some more support and continue down. These are the steps that you do when you're going down. You climb off of the step, go down, find some support at these inversion gaps. So that's your inversion fair value gap. We kind of want to see you drop below, come back into it, and then the weekly, they're overlapping. So that provides a level of support if you want to continue down, or a level of support if you want to go back up. So right now we're in a place where you go, all right, are we going to get a measure of retracement for a bit, or are we actually going to continue pushing down? Don't forget, seasonal tendencies for markets are in October, for an October low. Not that you take that as the gospel, but it is something to look forward to in terms of your overall objective. And we've hit 50% of this huge range right here. So smart money is pushed back down into a discount, which is anything at 50% or lower. And we hit the 50% mark right there. And now we're retracing off of it inside a daily, or sorry, inside a monthly and weekly fair value gap. We have found a measure of support so far. How far back in this range now do you look for a measure of retracement? I'm just throwing ideas in from my visual journal here. Let's make this a little bit bigger. So let's say this is the range. Let's say that was the bottom. Not that I'm predicting the bottoms, because I'm not. I'm just journaling an idea. Let me get this thing out of the way here. That's a couple of days ago, or a day ago. Delete that. Let's say this is the new range we're looking at. And this was the low, because we've bottomed out in some key areas here. And we're coming into the end of the first week. And let's say that is the bottom. And we're thinking about, okay, now what area of liquidity can I reach back for? If I want to continue down here, and I was smart money and I wanted to push back and I wanted to take out any people who were trailing their stops, or I wanted to go back to an area of liquidity that needs a little bit of rebalancing to gather up more orders to continue on down. So here would be 50% of this range that we've just created. So you're looking at, look what happens here at 50%. You see that little pocket of 50% right there? Right there is your daily fair value gap. That's a SIBI. We return to the SIBI, back to old lows. Look at that. Nicely. So I'm finding confluences that support an idea here. Now, I want to see this get on top of this and continue going back up. That will further support my idea for a return back up into the upside and create a small, a lower low on this side, or a higher low on this side. So we've got a higher low here, stop, a higher low. I'd like to see a higher low get on top of this fair value gap weekly, and then start pushing back up. And for those retail people, that's a reverse head and shoulders. But for us, I look at that as a potential run back into a discount to continue going lower. And then if that happens, I'm looking for a price leg. Now this is a big move. So if the S&P 500 decides to continue down for the rest of the year and poop the bed, as it were, this is what I'm looking for. I'm looking for, let's say, now I'm kind of I'm pushing this out here. There's so many things that can go differently than what I'm trying to show you here. So if this is the 50% up here, look where they line up for. I'm just spitballing here, folks. Just spitballing. If this is the price leg and it returns back to an area of liquidity inside the lows and inside a breaker that runs, this is the parent breaker of this big run up into this higher swings, swing high, swing high, swing high. It's a mitigation block right here because it didn't break a old high, but overall it's the lowest down close candle in a run that supports, runs above old highs back into, oh, look at that equal high. It looks lovely. It's a nice little pocket up there we're going to reach for eventually. That's months away. Months away. Anyway, sorry, we're back here. Sorry, my ADHD just kicked in there. My mind was running in 10 different directions. So if my idea is continues in the predicting, if I was pushing for lower prices, look for it to return to here, off that breaker, and then a good price leg down lines up with our weekly fair value gap, and we run through that. So that would be the next price leg down. If I'm right, that is the direction I'd like to go. So who knows? We got the day. So let's see the days going up into next week. Do we get a little reversal, pump up, drive down? First couple of days of next week, do we get a big drive down up to here and then back down again? Anyway, that's how I'm kind of piecing that out, and I'm going to leave that there as my journal entry for October 5th, making sure that everybody sees that that is actually my October 5th live trading concept for There's my boy. Good morning. How's it going? How's it going, Kevin? Do you still feel the joy from that approval yesterday? I love it. Proud of you, man. Good for you. This is so anyway, that was my prediction for the low for the upcoming S&P down here. And if I vaguely remember, Michael's got a lower prediction for S&P as well. So that's how I would block it out. And I believe I agree with what he's saying. If S&P is on a low run down, this is the area I'm looking for it to run to create that new price leg down into the lower range. Good day, is it? Excellent, my friend. Good day, good day. I was outside grounding myself. My shrink was saying, hey, look, a good opportunity to go out and ground yourself, get yourself kind of relaxed. After doing all those years of paramedic stuff, your mind gets a little frazzled. Go outside, step in the ground, just step on the ground with Mother Earth and just kind of let things melt away. Just let it melt away. And out here, you got to do it quickly because it's starting to get cold up here in Canada in the mornings, like early morning. The sun's already not even anywhere near us right now in the morning. So it's dark. Stand outside on the cool grass, just kind of quiet, breathe in some old smoky air we have here in Canada. Actually, it's diminished quite a lot. And kind of get grounded. Then come back in, look at the charts, and get yourself set up for some interesting week. All right, so what do we got left here? Let me get back to this. See how I lose focus real quick? Let me look at this. This is the hourly. So if we're continuing on that upward run to support this drive, so we have Oh yeah, sorry, there was something else I wanted to talk about here. 1, 2, we might get that 3 drives pattern down. So this might even push down even further yet. And if that happens, that changes that whole concept about what I just talked about. Because now we have a further leg down, which would support further into here perhaps. So if we do get a 3rd drive down, and then a return to the top of our fair value gap there in the monthly, where could it come down to? Sweep this low inside this inversion fair value gap again. I'm stronger on this one, and I don't want to marry an idea, but I do like this idea. So we'll see if this ends up being a 3 drives pattern, which is a signal for a reversal. Not that that's a gospel, but it's a 3 drives pattern for a reversal back into here, and then you take that price leg for the bottom of the 3rd drive down back up above here. If it runs back up here, halts and then starts to come back down, that's where the price leg is predicted from. I'm just kind of jumping ahead of the game. It's kind of like what I do when I come across a paramedic call and I get all my firefighter buddies with me. I give 10 people 10 different orders, and then 5 seconds later say, why isn't it done? Because my mind is already like 10 steps ahead. Bless you guys for always being there for me. Love you. Love my fire guys. So I always wonder why they have issues. Paramedics and firefighters always have issues when they're on the scene. It just seems to be 2 old schools getting together, button horns. EMS is used to being we're very ego-driven, alpha personalities, just 2 people in a car. One person's usually in charge of the car. Usually your medic is in charge of it. Your EMT follows the directions. They work together as a team and that. But it always bothers me that fire and EMS in some municipalities just don't seem to get along. There's been all-out brawls and wars over it. It's ridiculous. I had the pleasure of working as a fire paramedic, so I got to do the best of both worlds. I got to run the pumps, I got to run into burning buildings, I got to rescue people from cars, and then I got to do the paramedic stuff afterwards. How awesome is that? What a great career. And I got to do it in the mountains in Canmore. Oh, what an awesome job to have. Love you guys out there in Canmore. Great career. It was a great career. Let's go here. So anyway, that's the projection. I can't really, if the 3 drive pattern goes, I'll have to reevaluate that journal kind of entry that I'm talking about now. Let's go to oil. Oil did exactly what we were talking about yesterday. I was looking for a further drive down into the weekly, and we've ran the whole thing out now. So we're down into the $82 range. Look at this drawn liquidity down here. We have a weekly and a monthly drawn liquidity. Look at that whole range. And I'm just curious to see. Okay, so price legs. See these price legs? 25, 50, 75, 100. Didn't quite get the 100, but those price legs are boomer. Boom. Anyway, just something I visually saw right away. When you see these price legs running up, you go, oh, that looks awesome. If I break that high, that's a perfect price leg entry. Look for a point to get in. So here's your price leg up. The next price leg, as soon as we break this high here, you wait for a fair value gap to form right there. You get long. Run for old highs. You would have been like, oh, all these days it was working so good, then it came back right to me again. You give it one more opportunity to get in, then it finally broke those highs. Then you get the big push down into the fair value gap again. fill it this time, then the run back up for the long haul. So if you took that as the overall long one, oh yeah, that one works right there. So from there to there, that's your 25, 50, I guess 75 would be here. And then that's the 100. When you look from there to there, that's your retracement. So those are the two big price legs. And that's the 25% price leg, 75% price leg. And there's a slight distortion, I guess, in the last 25%. But overall, that price leg works quite well. So you get to see the idea of how price legs work. And they can be super accurate, as in this case. Look at that. Bang on. The difference from there to there, there to there. Is it a coincidence? Is it just randomness? I've just pointed out 3 opportunities this morning to see that they do work, and price legs, perhaps part of the algorithm, as it extends, it doubles its range after it hits a specific data point, which is, strangely enough, coincidentally maybe, the weekly return to the fair value gap. We come into it, get above it, come back into it, and then run all the way back up right from the confluence, top of the fair value gap for the monthly, bottom of the fair value gap for the weekly, precision, and then precision exit reversal. I don't know. I love these strange coincidences that occur in the market, so random. And they all have everything to do with fundamentals. Everything to do with all that crazy freaking noise you guys hear out there in the world. Everybody's saying OPEC, all these guys yakking and stuff. That had absolutely everything to do. That conversation they had on that day at that time was absolutely correct. And thank God that those guys met in that boardroom, had that meeting to reverse the prices and get us back into a normal range. God bless them, right? Come on. Come on. Algorithm or not. None of this had anything to do with anybody chatting away in a corner room setting prices. This is algorithmically driven. You'll never convince me of anything else. But anyway, too precise from, and look at that, that's from June. And if you saw this back in July and you're predicting your 25%, 50%, and then taking that range once it came back into a logical level and then ran off of that and said, holy man, that looks like a price leg, and that was your objective, Lord, that's a lot of pips. $77 to $94. I was calling for 95, so it was just a little short. I wonder if that was the price leg that I was looking at here. That was the distortion. Yeah, I didn't look back far enough to see all this stuff. Okay, that's a little bit of joy for the old S&P. Oh, here we are at 10 o'clock, so we're about to see some changes. Let's quickly look at gold. Gold, again, been calling this one for weeks now, down, and I like the fact that we're continuing down into the monthly fair value gaps. We're looking for a run on these old lows now, and we're looking for more draws on liquidity. Look at this. We got a big draw on liquidity on the monthly fair value gap and another one below that. We have weekly fair value gaps inside of that. Here's your weekly, monthly. So we have huge pockets of magnets as a draw on liquidity for gold on the downturn. So look for more downside on gold. If you're into gold, your opportunity to buy more of it rests in the 1700s, I think now. We're away from the 1800s initially. We were calling for that. Now we're looking for, I was looking for 1835 to return to that and then start coming through here. So we still could get a pump up into 1835. Maybe non-farm payroll will push us up there and then turn around and push us all the way back down again. I doubt it. It's like 20 some odd bucks ahead of us. No, that's 15 bucks. And That's it. Tech. What do we got for tech? NASDAQ. Lord, let me get all this stuff over here. Oops. Dark salmon just seems to be a little too dark. I'm usually go to light pink. I'm colorblind, so I go to the fact that they say it's pink, and I can see maybe a light pink there. Looks close to gray to me, but light pink. We have a lot of new week opening gaps in the way there. There's more downside draw. I still see weekly draws on liquidity. We've got some equal lows here. We're inside consolidation. I've got nothing really for this because we're inside the monthly fair value gap right now, so I really don't have a big call on tech for you right now on the daily, hourly. Look for a return into 50% or a discount in here back to this. You got little pockets of fair value down in here. Lots of bissies along the way. So for the hourly, look for a draw down into a discount range. Here we've just ran these equal highs out here at 10 o'clock. Or not 10 o'clock. We ran that out at 1500 this morning. Look for a pull down into this range here for this morning, or 50% of that range at least. Let's look at 50% of that range. 50% puts you here, 62% puts you right in the middle of that first fair value gap. So look for 62% retracement and then a pump back up, or at least get back into your optimum trade entries here. 79% puts you right in that one as well. So look for your discount before they run these equal highs out here on the upside. So you're looking for a down into here, bottom of the fair value gap, and then back into the range again for the monthly fair value gap. Oh, I'll leave that on there just so we can look at it a little bit later. Let's go to the S&P 500 daily because we're looking for more downside, and let's look for our opportunity. We just ran this 10 o'clock low out, didn't we? Yep, there's the 10 o'clock low. 10:01, there's 10:01, so there's your silver bullet entry to go lower, or right near the bottom of this. I hate when silver bullets happen right near the bottom, so I tend to wait because you're looking for that as an objective, and if it ran it out already, is it really going to reverse here now? So I wait for the first 12 minutes to run out, and then I have a look for GBP 5-minute candle at 9:55. Would you consider that slight small wick enough to to conclude a draw? I can't tell, there's hearts in the way there. As a draw on liquidity, let's look at five-minute. 9:55. 9:55 right here. Oh, between there and there, or here and here, is definitely a silver bullet entry. They've ran those highs at just before 10. Now, if you can run back into here, then a short down into a 50% or less of this range is good. There's the finish of this fair value gap here. We have one down in here. So I'll look for a return back into this area here. I'd like to see a body get below here though. Body end with this, create a little fair value gap, come back up into it, into that breaker, and then get short. And you're aiming for here and here. Does that make sense? What's your doing on the 1 minute? Oh, look at that. There's your 10, 10:01, 10:02, 10:03, little fair value gap, come back in. There's your silver bullet entry. Running here, running here. That's the silver bullet right there, right at 10:02. So keep an eye on this area here for, I want to see a body get below here though. See a body get below here, come back in, tag it, then get short. That's what I'm looking for here. For a break in this little swing below here, body, gap, return, drop. Here's your next one. We just had another fair value gap forming in here. We've dropped below a body. So that is technically a continuation on the downside. Your fib retracements, top to bottom candles, do you include the wicks? Yes, I do. Yes, I do. The only time I don't use wicks is when I'm looking for the mean threshold of a candle. I use the open and the close. So if I was going to look for the mean threshold of this candle, I would not use the wicks. I use the bodies. The consequent encroachment is the middle of the body of the candle, not the top to the bottom. And I know Michael's taught both sides of it, but in his charter member, it's the threshold is the actual body itself. My mind reading abilities. That was my next question. And Michael's done this as well. He's pulled from body to body and not the wicks to find the thresholds, the midpoint, but I pull from wick to wick. That's just the habit I get into. If you did pull the, let's say you did, let's go here. Let's just, curiosity, let's go from body to body. Optimum trade entry, perfect, 70% retracement of that body to body retracement. Optimum trade entry, hit it, and then left. Okay, now let's go to the wicks. That's the difference. That little piece right there. Now that's obviously not going to be the same. Sometimes you'll have bigger wicks, longer wicks. It's a choice, I suppose. There's 75% retracement right there. Right on the money. And let's extend down to the wicks. Not quite 75%, but it's still in the optimum trade entry of 70%. So do you want to haggle over one or the other? I don't know. I take the wicks. I used to take the bodies, but I take the wicks. Because the wicks can be the, wicks are also where the broker can mess with price. They can extend their ranges and stuff, or they can extend their spreads. So wicks do the damage, but the bodies tend to follow the algo. So you may be more accurate taking the bodies than the wicks. Something to think about. Something to think about there. May have to be to backtest to find out which is more optimal, but I guess if it's so small of movement, it wouldn't really matter. Yeah, now as long as you got your optimum trade entry, then there's 62% retracement. Bodies are almost respecting it versus bodies are respecting it. Marginal difference there. Yeah. If we took this back in here. Wick to wick, 50%. Body to body, 62%. Oops. Almost 62%. Yeah. I think the general rule is we're looking for a discount, right? So I think over 50%, I'm looking for a discount range, and I'm looking for not just that. I'm looking for confidence. I don't just go exactly for the 50% or 62%. I look for those areas, and then I look for what in that area supports 50 or 62% or 70%, that kind of thing, right? But I guess it's tagged into that fair value gap. Here's the run back up into what we were just talking about here. There's 50%. Let's go with the bodies. Still 50%. Now look at this. See 62%? When you're looking at this retracement, I go, this area here has liquidity in it. We have SIBIs. So is 50 the likely return? No. I think maybe 60. We're looking for areas of price imbalance. We have a breaker sitting up in here, and we also have a fair value gap. Breaker with a fair value gap. Right there. That's where I'd be looking to try and get short on this. Back into this, and you want this to stay open. If this is a breakaway gap, it can come back and tag it and then leave. It's like taming a lion, isn't it? Now back with you. And then to push up into your premium, breaker, short. Aim for here, 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 and then so on. Where are we at? 16. All right, let's just go back through a few minutes. So kind of keep your, well, I'll kind of leave that up there so we're looking at the euro up in here for potential. Not that I'm really taking any trades today. There's 50% of that range we were talking about earlier. Looking for this as a downside objective. 62% retracement. and then a run back up to clean those highs out. So far that prediction is coming true. Gold is still pushing down. Let me just change this thing because it's a little too light, and that says light pink. Okay. That's a little easier to see. 1 minute S&P. So there's the swing below. That's your entry in short there for your silver bullet. Aiming for here. And whatever else is back that way. Now we get the 12 minute. Here's your 12 reversal. Now here's your next silver bullet. I want to see a body get above that, come back to here, inside this consolidation now, and start to push for higher prices. My wife just made it to work. Okay, things a bit crazy here. Oh, being a principal in a school, I tell you, bless her. You are at the helm. All right. So look for this. So I'm looking for a run back up here. So what I'm looking for here is, now that we've got on top of this, we've got a fair value gap, another fair value gap. We got a body above this now. I like this. So I'll return back into here on the next candle. Let's turn on our buys. What the hell? Let's turn our bot on. Oops. Let's go wolf. Okay, let me just get this thing going here. Let's go to 10 and go to 19. And we're gonna do, well, what the hell, we'll go hard. I'll let the bot do the thing. There, it's loading up to go along now. We'll see if these all work out. And then we're going to feed the wolf. I'm going to turn my sell side off. I believe we're looking for upside here. This is the kind of support I want to see. A body get above this, come back in to an area of liquidity we can capitalize on, then start running for these highs here. We'll see if the price comes back and lets the bot, we'll grab it. Again, this is demo. This is not live trading. I'm just playing with the bot right now. Do not trade non-farm payroll week. I'm just letting the bot do some playing here. It's looking for a logical level of entry. Let me see if we can redeem itself for the mess that it created this morning when I let it run by itself. I set some times, let it run, and it did not do well. It's better to have it observable like this, where you can shut one side down versus the other. So I came all the way down to the edge of it, didn't get in because of the spread, kept me out. Unless it comes down there. Now it should go on. Good. See how it drips below it? There's a ghost spread in there where it's just a little higher than there. So it has to get all the way down into there before it actually tags those entries. Interesting. So what you're looking at in terms of your entries, you don't actually get that stuff. Now, why is that closing out all those trades? Oh, they've moved to stop loss to break even already. Why are they going to break even and out? Back to the drawing board. I don't know why that closed out those. I might have one of my parameters set wrong. Let's get all those out of there. Turn everything off. All right. Well, that didn't work either. But that was our entry. Took him, but it just kept closing him out. More bugs to work out. I don't know what I did wrong there. Did I set one of my parameters wrong? Okay. GBP is back under 50. Back under 50. Look at this guy here. Keep your eye here. Are we coming back into finding support and continuing push up to these higher runs here?
Good morning.
Oh, I got one of my boys here. Good day, Richard. How are you?
Good day.
You're in here with my buddy in New Jersey who just got himself a. His name's Kevin. He can't. He can hear you probably, but can't see you. He just got himself a funded account. He's been doing ICT stuff. He's been doing his ICT for 2 months. He's just been running one specific setup pattern, a silver bullet entry. He's been nibbling his way through. He started this whole funding account. What was it? A month ago? What did you have about a month ago there, Kevin? You started your funded account or your brokerage account, and then you just got funded yesterday. And he's only been doing ICT for a couple of months.
Wow.
So
now I don't see him up on the screen.
No, it's because you got to go to the live trading. September 4th, he started his account. So if you go to the live trading ICT Concepts, October 5th on my YouTube channel, we're live on YouTube right now.
Okay, let me go there.
And you'll see him in the comments section on the side there.
So it's YouTube, okay?
Yeah, go to YouTube there. And the Breakfast Club obviously is our little group that we start here in the morning. I think Kevin's looking to get a new speaker if he's interested. Well, he'll be joining us in the Breakfast Club for an actual chat. We can talk in the morning as well.
Okay. So that is ThetaWave Trader.
Yeah, all one word. And you'll see us live there. So
ThetaWaveTrader.
ThetaWaveTrader, all one word. Yep.
Okay.
And don't forget to subscribe and like.
Good. Subscribe.
So this is the thing we were talking about this morning, Kevin, right here. There's your
Oh, okay. So I see the live.
yeah.
All right.
Click that. So this is where we're looking. You might have to turn the volume off on the YouTube channel and just keep that off while we chat, otherwise you get an echo. So here's the inversion gap we were just looking at, Kevin, right there. So that's the one we want you to kind of keep your eye on. And make sure that goes to properties, and we're looking at
Oh, you're on the pound. Okay.
yeah, we're just doing the pound right now. We're jumping back and forth between a few.
Yeah.
But that's the inversion fair value gap we're looking at. So we popped up there. That's the one that supports price. It is also the 7 o'clock silver bullet entry to continue up for here. These equal highs above. And yeah, so that's what we're looking at for those. But again, non-farm payroll, we're just observing this week or this day. We've had an awesome week.
That's tomorrow is non-farm, isn't it?
Yeah, we've got to be out of the markets by today, or at least the afternoon of yesterday. If the people have things in the market, it's best to stay out or get out today, this morning, before the afternoon. Non-farm payroll can start really pushing this stuff around. So we're just basically looking at keying off of inversion gaps and looking for Kevin's setup in the morning, which is the silver bullet entry. And when
is he trading the 1 minute or 5 minute, or what is?
I think he focuses more. I think you focus more on the 5 minute. Do you not, Kevin? Just look at the conversation on the sidelines there. You'll see.
Sidelines.
You'll see on that where it says chat. Then you'll see a whole
Top
stream.
Chat. Yeah.
Yeah. So he'll comment in there.
Oh, I see.
So people who pop in usually pop in and have a look.
Yeah. Oh, this is exciting.
Yeah, he says 5 minutes right there. So he's usually on the 5 minutes that he'll look for his entry. So if that's his entry right there for the silver bullet, that is the silver bullet reversal, because remember, this is a short, this is a SIBI, so a silver bullet entry would usually be here to go short, right? But
I'm not seeing your mouse. Is your mouse running?
Yep. You're on your live one?
It says live trading ICT concept October 5th.
Oh, yeah, okay, yeah.
It must be really delayed or something. Where I'm at, that could be. That's all right.
Yeah, you didn't hit pause on your screen, did you? Did you click on pause? Like click in the middle of your screen, and if you see...
oh, that's what I did.
That's what you did. There you go.
That's what I did. All right. We're good.
So he says, I usually trade Euro USD, GBP USD, but I'll also go to gold and NASDAQ. Yeah. So here's your inversion fair value gap now. So now this looked like a SIBI or a silver bullet entry for a short, but I like to wait till around 12 minutes after the hour and wait for the next silver bullet entry. And it's 6 of one, half a dozen of another. Depends on which way you want to look at it. So there's your 5 minute one. So if you took that short with your stop loss sitting above that, you'd be aiming for down here, here, and then here as your here as well, and here as well, as objectives to snatch some pips along the way. But in this case, now that we've got above it with a body, here's your inversion fair value gap. Now you get above it, come back. If you find some support at it now or anywhere within inside it, we want to see it push up now for higher prices. And we're looking for these equal highs. There's a ton of liquidity sitting up here. So that would be your upside objective. Your stop loss would be sitting down here, and you're looking for a run above those old highs. The moment we break this high here, that's when I move to break even, make it a stress-free trade, and you're looking for higher prices up there. As soon as you get that one, you move your stop loss to just above break even, so it covers your commission. Plus, you've already taken out 10%, 20%, 30% over above these highs, and you're nibbling profits. That's how my boy down in New Jersey has made his claim to fame, as he has done. He has nibbled his way like a little
Yes.
mouse sitting in the corner eating cheese while everybody else is trying to feast on these home runs. He's been nibbling away patiently for the last month with his account, his first account. It is your first account, right? You haven't even blown an account yet. And he's 2 months,
Wonderful.
and he's only been doing ICT for 2 months. He has found his
Wow.
entry, and that's all he's doing. He's not getting greedy. He takes his 1 or 2 trades a day, and that's it. He's done. He walks away. Discipline.
That's right.
And he's a corrections officer, so he's disciplined, right?
Oh.
He's a disciplined guy. So
Yeah, there you go.
so he knows what discipline's all about because he's dishing it out all day, right?
That's right.
So the boy knows his discipline, right? Only silver bullet and nibble for the month, 10 to 15 pips. That's what he does. And now he gets his funded account as of Monday. So bless his heart.
Monday. Bless his heart.
So good for you, Kevin.
My hat's off to you.
Yep.
Hats off to you.
I had a
Hat trick,
5K.
man. A hat trick.
He said I had a 5K funded with my FX fund, but they got shut down before I got my first payout. Oh, so this is $100,000 account with Bespoke.
Never heard of this boat.
No, I haven't
That's a
either.
new one. Huh.
But he's got a $100,000 account now. If he starts moving that up 10 or 15,
Yes.
10 or 15 pips at a time with a 1% leverage, oh,
Man.
he's going to be buying his own prison. Get to work in his own prison. He's the,
Yeah,
I own this
yeah,
prison, right?
His own basement prison or something, huh?
That's right. He can buy his own jail cell and start importing his own prisoners.
That's right.
I love it.
Oh, that's wonderful. Wonderful, wonderful, all good.
Yeah, that's the whole purpose of this channel. You started off more of as a visual journal entry thing for me, where I kind of predict where the market's going, and if somebody pops in, then great. And Kevin popped in. How long has it been now? We've been here for about a week. This is our second week together, and we've been hitting. I think we're like 11-0 on our trades right now. We're killing it, so that's kind of good. And
Very nice.
Yeah, we're kind of hoping we keep this little freight train moving. We're taking our time, and I like it because
He doesn't want anything else to do with jail.
I've been around for 1 year. Figured smaller ID go with them, but we shall see who goes. No, only 7.5 years till retirement. Don't want anything more to do with jails. First 1 week last Thursday I found you, right? Yeah, he doesn't want anything to do with jail. That's okay. That's okay, man. You can buy yourself a boat, float around on the water, and look back at the days in the prison and go, this is what real freedom feels like. If only those people knew. If only those people knew. So, yeah, he's kind of, Kevin being here is kind of helping me stay really tight to my rules. So we're teaching.
Yes.
We're teaching the rules here and making sure the rules are followed. And if they don't, like here's an example right now. So we've come back up. We haven't taken out our high. So we're still putting this guy at risk down here. So if we start to eat through this double tap here right now, I wanted this to get out. So I would be out of this. I would close out of this trade just because we tapped the bottom of it. And like we're describing this yesterday, once we get above it, we come back, we want to tap it and go. And you lose strength every time we come back into another PD array. So I come back into here and I go, okay, you can have the middle. And if you tap the bottom, you say, that's it. Now, if I even come back anywhere near that again, I'm out. And here's an example. See how I would have got out there. So if that was your last entry, 1, 2, and 3, your last entry would be break even. Your mid entry would have been a small loss, and this would have been a bigger. But that's small leverage, medium leverage, hard leverage. And if you let it sit there right now, you'd be going underwater. And the rule for me is if you come back into this, once I break above it, I want to come back and tap it. If I come back through my original entry, get out. Because it's not, I want to see something with some strength. Get out of there, right? And this has its own set of rules for me and how I play it. So now if you We're going to go back to the silver bullet entry. If this is your silver bullet entry and you're entering in either 1, 2, 3, or anywhere inside there, or you did take all 3 of those entries, your stop loss goes above here. Look how tight you got squeezed. Now, if your broker opened up his spread, he would have taken you out right there if you had your stop sitting right above that. That is 1/8 of a pip. So that's 8 pipettes above your thing. So they could spread you open. There's 1 full pip spread. So if you were here, 1 full pip spread, they could have taken you out. So that's the open. That's that thing they do. So now you're in this consolidation. This is sloppy. This is why we're not trading on-farm payroll, man. Now let's go back to the 1 minute there, Kevin, and have a look at how that would have worked at 10 o'clock. There's 10 o'clock right here. Here's your first entry. And that's your silver bullet there. Or here's your silver bullet. There's 1700 there. Next silver bullet, if you would have entered in there, it would have taken you out right there. That's why I like to wait for 12 minutes after. 12 minutes. There's your first silver bullet. You don't quite get it because you're aiming for up here. You're aiming for fill, and there. So you don't quite get it there. You would have had portion out, portion out, portion out. You would have portioned out all the way up to the midpoint there. Come back, order block, breakout, another set of, we have another 1 minute silver bullet. You come back, take you out again. So the 12-minute one, right at 12 minutes, I like to look for a fair value gap after 12 minutes. And that's the one where you can get this wick down. And then the next part of that hour, like usually the first 15 minutes is the wick, and then the body continues after the 12 minutes. So that's the kind of one I look for. And again, you may find multiple examples of where you can get in early, or you can find multiple examples of getting in a little bit later. This one kind of, you're pausing, but I think you tend to get more accuracy when you wait for the 12-minute. I'm trying to find you another example here. Here's a good example. There's 1600. So if there's your silver bullet, right there, there's 1603. And then wait, watch this, 1607. 12 right here. Aiming for here. 12, no silver bullet. You don't get anything there. You would have got something here, and it would have taken you out. So my theory didn't work after 16. You wouldn't have got either one of them on 16. What's this one here? 17 or 15. Okay, so there's your, if you took this one on 1505, 1504, you took that as your first silver bullet on 15. You come back into it, you wouldn't have got it. It would have taken you out. You wait till the 12-minute mark right here. 12-minute stump comes, then what happens? There's your next one. Enter in there, and you would have got all this. You would aim for there. That's why I like that. Wait 12 minutes. Wait for 12 minutes. And you'll see that every hour. You'll see the same kind of setup happening. So let's go back another hour. You'll get the idea here. Here's an example of it working at right on the hour. So there's your 13. So where's your 13 there? Breakout silver bullet was your price imbalance. You come back to it, and off you go. 12 minutes. If you waited for 12 minutes, nothing. You've got it right here. Took you out. And then, yeah, so far we're hitting 50-50, right? Anyway, I like to wait for 12 minutes. That's usually my general rule. With your bias and all that other stuff as well that supports your direction. So here's that inversion gap again. Okay, this is a good example. That's the inversion fair value gap we looked at on the 5 minute, was it? Yes. 5-minute inversion fair value gap. Watch what happens here on the 1 minute. We go all the way through it, come back, tag it. Now that becomes an inversion fair value gap. You get support off of that. You're aiming for here. We have also got below this one with a body. Now, do we come back and find support right here? And then key off of that and continue down on the downside? We aim for premiums around 121.00 level. We aiming for premiums at the 121.08. 121.08. 121.08. 121. That's way down here. That's a discount. We're aiming for premiums around the 121.08. I think I got a different. As I typed that, I realized that 121.08 was our level last week. Yeah. So here we're in a consolidation, right? Not a lot of, I don't have a lot of faith in this one right now just because we're in a consolidation. But if we were to say this is a break in structure to the downside, we look for a fair value gap. Also inside a 5-minute fair value gap, we've come back now and found support at that. And we've broken down below this fair value gap on the downside. So if we come back up inside that, see how we're tagging the top of it, which is also the bottom of this one. We've worked that. Now we're coming back. We're working the middle of it. Now we come back and work the bottom of it. We're looking for all this down below to get taken out. Again, not that we'd actually trade it, but that's kind of like what I'm looking at for a break in market structure. We still have that upside liquidity further up. Remember, there's like a ton of it up there. So you want to see this kind of whole price no more than this. I want to see this breaker, which is the midpoint of this fair value gap inversion. Last down close candle before a run above an old high. That's a breaker. If we get returned to the breaker, that's fine. We're just finding support once again. These are pipettes above here. So you look at the price here, you'll see that the high price is 462. This one here is 464. 2 pipettes just to clean that out, right back into that range again of that 5-minute. Now we're going to push down. Here's your next level. Drop down into that order block. Is that a high or open or close? Open 4172. That is a bull candle, so that was not it. This is the one you're looking for here. Small little imbalance. See that little tiny imbalance right there? Sorry, that fair value gap. That becomes inversion. We're bouncing off of that with precision and moving back into inversion. So where do we go? Look at the range. Look at 50% or more for premium. That supports breaker. Because I bet you if we pull from here to here, 50% puts us right back in the full fill of that. Inside that breaker, inside the fair value or inversion fair value gap. So look for, I'm just trying to call, this is where it gets really challenging because you're trying to call PD arrays inside of a consolidation. So that's the kind of internal range liquidity we're looking for right now. So look for this area here to find some support. If we blow through this and get on top of it again, now we're looking for upside again. Now we've got lots of liquidity above, lots of liquidity below the market. So it's booking both sides. Which side's it going to run first? If we look at the arrays inside and say when they run out, what's the most logical place they would run for? See this little guy inside here too, which is the top of the 5-minute inversion fair value gap. Off the 50%. Now what Kevin and I were talking about this morning is, do you use the bodies or do you use the wicks? If you use the bodies, you just hit 50% reacted off of it, which is what we're looking for. If you use the wicks, we're just shy of 50%. But 50% lines up with a perfect fill of that fair value gap there. So we'll see what happens here. Because after this, if we run through the 50%, now we've hit it right square on the beezer. Now, do we push through that and start looking at this guy here, get on top of that, and start pushing up for higher prices? Or is that the point right there? The fill and leave. So this is when we're just kind of watching price action to see if we're picking the PD arrays correctly. We should see reactions. I know, as you saw, we're seeing these little precision pop-offs. Now, that doesn't mean to say it's not going to run all the way through, but we did see it hit it and react off of it, which means if I was looking at this on a 1 second chart or a 15-second chart, that there was hitting a PD array at that level and fractally now returning to another PD array in a discount portion somewhere inside a 1 second chart or something. So we've come back, gathered up whatever we had to there. Now we're pushing through this fair value gap right here. So now my eye goes towards, are we going to get on top of this here now? So if we take this 1 hour one or 5 minute one and we do this, this now becomes an inversion. If we can stay above it with a body, there you go. Now come back and tag it. We're into 62%. We're into a premium of this big range now. So keep your eye on that. And then the optimum trade entries. There's nothing in here that supports optimum trade entry. Sorry, that doesn't support it. We do. We've got a breaker right there. We're on 79%, but we have no fair value gaps or anything. So if we come back and tag this, I want this to provide a level of support now. I'm going to start pushing all the way through, at least up to here. Small little pipettes, nothing that you can. That's 5 pips back up to the breaker. So we were looking for this to provide support now. If it doesn't, we lose it. Does it provide support on the opposite side again? And we're going to go back down. We're in a consolidation, so this is where people get beat up in consolidations. If you don't watch and look specifically at the PD arrays we're aiming for, so if that's the premium you're looking for now to go short below this low, you've hit it right on the money. And your stop loss would go where? Above that high. Now, in order for this for me to provide support, I want to see it come through here, come back up, and inside that. So basically what we've done is we've come to the midpoint, which is fine, which is fair. And now we're looking to push up for higher prices. So we're looking to come up into here at least. So if I was going to trade this, I'd be taking money off right at that breaker. Not the high right now. That would be my first scale out right there, if I'm just trying to snipe some pips out of here. So we got our support off of here. If you had your entry sitting right there, it just came to the midpoint. Your stop loss goes just to below here because that you want to provide support. If you're wrong and it comes back and takes you out, good, then you're wrong. There, we hit it bang on the money. So there's your first scale out right there. So for our entry, that would have been 5 pips, 5.6 pips. And then the next one is above here and running their old highs. So PD array 1, PD array 2, PD array 3, all in one candle. So to me, that's got a positive push for an upside run. So we're into the rejection block right now. So right now, just because it's eaten through that breaker, I would have moved my stop loss from down here to right at the bottom of these wicks right here. So I would make a little bit of profit, and I would it would have always scaled out 10% up there. So if it does return all the way back down, you got 10% out, and you're gonna get your commission back. This is really chasing your stop loss, cracking in on inside consolidations. This is how you can work the inside of a consolidation and save your money at the same time and minimize your losses. So we're looking for upside here now. I can get rid of this. You'd scale out a portion right there. Keep in mind, when we have consolidations, this could be another one of those equal high things where it turns around, comes all the way back down, creates another equal low, and we get into that consolidation. So rejection block, I'd scale out another portion right now, another 10%. And even from here to here, that's 8 pips, 7.5 pips. So you got 10% on 5, 10% on 7. This is my buddy Richard. He's the guy I was telling you about for his immediate workout bug and got it. Well, let me move that over there. He's leaving Dodge. Okay, no worries. There we go. We're going to push that up there. So close right now. There you go. Done. So you take another 10% out there. Here's your next little gap. And I know this is not quite the, you're looking for your silver bullet entries at the beginning of the hour, Kevin. But again, I'm a big inversion fair value gap guy. I like those. I like to watch them. And for demonstration, again, this is just demonstration purposes. You start to see why they work quite well. So this one here is already, you scaled out 10%, 20%, 30%. So you've got 5. What was it here? 5, 7, 9. And now we could be thinking about, because now we're in a premium of this whole consolidation. And we've moved our stop loss to break even. Or now you can move your stop loss that was sitting just above here. Now I'd move it to below here. Because if this blows through this fair value gap again, then I'm done. And you've got a good chunk of your profits out above here, and you've still got 70% of your profits. You got a little tiny piece of profit there from your first entry. You got 2.8 pips. Not a lot, but they're nickels and dimes. It wins you a funded account over a month, as my boy Kevin's proven. Does this make sense, Kevin? You understand what it is that I'm kind of looking at when I'm looking at these inversion fair value gaps and how to find support on them? That Canadian Rocky Mountain rock climbing mentality that we're looking for. Yeah, I'm following. At least I think I am. You're doing really well for somebody who's so new to his concepts. You're doing really, really well. Again, this is just only one of many. So now, so far, we got two trading styles. One is in the morning for the silver bullet entry. Another one is these inversion gaps. And over time, you'll start to see how they become quite valuable. So this could be a new price leg up. I'd like to see that come all the way back down into here and then create a new price leg up. And here's, now you're learning a third entry, the price leg. Those three peaks, there's a 3 pipette difference in those peaks. Yeah, that is definitely equal, relative equal highs, as you say. Or in this case, we'll just say equal highs. If we come down here, tag this, that would be a price leg up, or a price leg up if we tap the top, middle, bottom, that little run we just saw coming up here to there. That 1057 caused a break in structure with the new high. That 1057, yep. Yeah, I want to see a big body candle. Always kind of look for a big body candle to break market structure so that you can come back into a fair value gap to continue up on the upside. So what I usually like to see in terms of break in market structure is, let me give you an example. This is the opposite side break-in structure. So you wait for a body to get above here. See how the wicks, it doesn't really get a big bold body. It comes back, does its thing, and then all of a sudden we get a body right here, fair value up. So there's your break-in structure to the upside, break in here. So these equal highs that are created here, when we break those to the upside with a body, I mean like a body like this, creates a fair value gap. You get in right there on your upside, aiming for higher time frame or higher objective. Okay, so that's what I mean by I want to see a big body get above it, because those bodies are what really get you your and you want to see the fair value gap on top of this, not just a body with a fair value gap below it. You want to see a fair value gap above it. See the difference between these two? This one is below it with a body that gets above right here, but see, this body doesn't break that high. This first initial breakout, you want to see this. You got little bodies here, but now we get a big body with a fair value gap. Now you can get on that. That's more of a positive sign than something like this where you have a smaller fair value gap below price, below the high. Because now we have a little pop-up. Now we have a reversal, island reversal, so to speak. We have a fair value gap on either side. That little cluster of candles he talked about in the middle. Then we reverse, come back down, take out the lows. What else is going on in here? Euro 50%, run back up. Let's delete that. This was the price leg in CAD we were calling. Finally hit it yesterday. We called that one, 2, 3, 3 days ago, 4 days ago. That was the price leg up, and it finally hit it yesterday. Price leg completed. Natural gas. Ooh, baby, look at this. This is what we're looking for. I love it. Natural gas. So we've got the big pop up above the equal highs I've been calling for weeks, actually months now, because I got back in May. This is the equal high. We broke above it. Good. Now I want to get back, find some support, or just run through both of those. Give me a huge candle here. Get back on top of that, and then start pushing for higher prices in natural gas. So really good day in natural gas by the looks of it today. This could just turn into a wick and we could see that can come back down. Look at that nice big run up. That was the next price leg I was calling for in natural gas, which we hit yesterday afternoon. So price legs again. There's multiple examples that have been given today about price leg trading. And there's a technique for actually getting in on price legs. I can't remember what Michael's is, but it might be the same one that I use. I wait for it to break the high of the close on that range on the way to the upside. Then I know I've got I'll wait for a return back into a fair value gap or something like that, an inversion gap, get in on that to run the rest of the price leg up. That's what I do. But that's the price leg we're calling on that one. That one worked out okay. Aussie dollar, look at that, come back down into price imbalance. We're looking for that to come back down to it, hit it, went through it with a body, come back inside of it, fair value gap, trade into it. We're reacting off of it. So do we have any downside? Is there a downside to the Aussie dollar? Yep. We got the threshold. We got these equal lows down in here. And we have the mean threshold of this down close candle, which is the parent breaker of this big run up and above this old high. So that breaker, we've hit it already, the threshold. Now we want to see it just run these equal lows, relative equal lows here one more time. And if we lose that on a close on a weekly, then we're looking for a rejection block and further down. Contrast that to the New Zealand dollar. So let's look at this here. You contrast these. So we have a consolidation, a breakdown below the consolidation. Look at this. Consolidation. We have a clear the old lows. August low is not taken out versus August low is blasted through. So New Zealand dollar is the stronger one of the pair. We have that little tiny piece of price action we talked about a while ago, last week I think it was, or earlier on in the week. We looked at this down here and I said it may not get back there, and it sure did. It got back there within 2 days. It ran back, tagged the top of it right there. And this is what I love. You know, people talk about fundamentals. They talk about, you know, the talking heads or bubble heads are all talking about this and that. And there wasn't a conversation that happened that put the price to stop right there on that price imbalance and then return back to this breaker's bottom. There weren't conversations that stopped price there and there. Fundamentals didn't stop it there and there. That's algorithmic trading, man. Precision algorithmic trading, I might add. No bubblehead talking people change this shit. This is pure price action, perfect delivery of price. And news events and all that other crap. Sorry, I know there's fundamental people out there that thoroughly disagree with me. But fundamentals, the boardroom meeting did not occur at that specific time of the day and somebody said, yep, okay, and now all of a sudden the market suddenly turns, right? Because somebody in a boardroom decided that their analysis was correct and the market was actually going to turn there. Fundamentals, I haven't found anybody that's talking fundamentals yet that says, fundamentally, this price is the entry. This price is the exit. You can't. There's so much fundamental analysis going on out there. One professional thinks one thing and somebody else thinks the complete opposite. And maybe you'll get the same thing in technical analysis versus algorithmic analysis of technicals. We might be a substrate of the algo people. But anyway, that's precision right there. So now we're coming back into the fair value gap on the daily. We've busted through it, hit that breaker one more time, and now we're pulling back into fair value gap on the daily. So we're sitting in here looking for, you'd have to look down into these lower areas to see where are we heading to next. But if you look at that internal range, we're right back near 50% of the range that was created over the last 1, 2, 3, 4. So this week, last 5 days, that's been the big range. So we're back into the middle of it, which makes our weekly candle look like this. We open, we're pulling back in, so our weekly candle is right around the 50% mark. All right, I love precision. S&P 500. Let's go to the daily. We're looking for more down prices. We talked about that. Finish this off. We're looking for further downside. Michael's been calling for further downside. I agree. That's the price leg. I'd like to see it come back in here, create this price leg down. But if it doesn't, we're kicking off of this order block right here. I want to see it come back, hit this thing here, and continue down. If this price leg doesn't manifest, I'm all right with that. This is just something I'm looking at from a next week perspective, perhaps. We'll see what happens here. If this drives all the way through, gets below these lows, then my actually, if it takes this low out here, then we'll just delete my little price leg idea, because we haven't had a retracement yet for the price leg. Okay, I feel like I'm understanding stuff, and then I watch the chart on news days, and I'm like, wait, what's going on here? Yeah, that news event just injects volatility in the market, and if you know where the price is reaching for, or where a price would reach for in high volatility markets, you wait for the volatility to inject into the market, create that sense of flow, wait for that to settle in, and then say, all right, now it's ran for some liquidity, it's extended its PD arrays, now how do I get in on the next, on the run, or the continuation up or down? So don't get too worried about news events. They just inject volatility that gets our market moving, and then we jump in on it. So like the way Michael used to describe it is like you're the flea on the back of the dog, and you hope he doesn't shake you off. You want to just feast on this guy on the way down or up, depending on which way the news event went. So once the news event's released, so after non-farm payroll on Friday, the opportunity to get in after the non-farm payroll event, give yourself a sizable amount of time for the markets to settle, and then later on in the afternoon on the Friday, you might be able to find some small setups that you can get in on to capture some pips once everything kind of settles down and the volatility is back, or sorry, the energy is back in the market again. He has his TGF Friday trades as well. That's another entry that you might want to look at to study. I'm still kind of holding on to this low here. If we keep this low, run back up in here. Again, I don't want to marry this idea. I don't know why I like that idea, but we'll see. We'll see what it's like. Just got to get into 1, 2 PD arrays. It's got to get in through this. It's got to get into a sizable return over the next week to drive back down again. What do we got? We got an 8 and a 9 on 11, 12. 8, 9, 10. Thursday, Friday next week. Thursday, Friday next week, we're going to expect. And I said it right here today at 9:12. Oh, almost 9:11. on a Thursday that next Thursday I'm expecting some changes to happen in the market. I don't know why. I got a little tool I use to look at the markets beginning of the year all the way through. It's not a super reliable one, but it's definitely one that I get some reactions off of, strong reactions. So anyway, next Thursday, it's been said, it's now forever in the market. It's now forever on the internet. Next Thursday. Oil. Kind of sideline on oil right now. Now that we've hit the objective for the week, we've bottomed out on that objective. I have no call right now for oil. We're back inside that range. We're into a discount. This would be a feasible place for it to reverse off of here and start to drive back up. We have this 2-day breaker right here, or 1-day breaker, depends on which one you want to look at. Up close candles before run below old lows, parent breaker of this big run down below everything here. I do like this piece here as the next, this gap as being a potential downsized down run return back in March of 2023. Was it March or April? April 3rd. April 3rd to here, that is your gap up that occurred in oil. I like that as a potential look back for a return. I'm going to put these prices in here. Again, my journal entry, just something for me to keep an eye on so that when I'm referring to this again in the future, I can say to myself, yep, I saw that coming. So my eye goes over here through all this stuff now, cut through all that crap and get right back into here. This big gap up. Price gapped up from here, closed here, opened here. So we have this huge section where price is returning to, right there. So look for price to tag the top of that all the way down to here. Split that into quarters. And like you split that gap into quarters. So pull your fib tool from the top to the bottom and measure the inside of that there. That would be your new week opening gap. Was it the 23rd? That might be the new week opening gap. 3rd to the, yeah, so that's the new week opening gap. So look for that return to here. I'm going to put that in there. And then put in the midpoint lines up with the top of our weekly fair value gap. I like it. Coincidentally, yes or no? Make sure I've got that correct. Right on the money. What an eye. Good eye. Okay. Let's lock that in. Lock this in. All right, so that puts us right on our Have I got that right? What's the open there? Open is 81,025. Oop. 81. $81,025. I bet you that would line up our. And this one here is high 75.76. 75.76. 75. 76. No, 75. 69.8. 69.8. There we go. That's right on the close. Now you pull your fib tool in there and you'll probably move it right to the top of that, my guess is. Right there. Closer. It's a little bit closer. Lock that in. So basically we're looking for, oh, I touched that now. Basically we're looking for this gap. I like the idea of this gap coming back and filling. If we reach for these lows, if we go through this midpoint, look for this to break into quarters now. Little bitty quarters. Okay, so that's the divided, that whole thing divided into the fours because it's huge. So I like these areas on the downside for oil. If we get a reaction off of here, do we come back, find support inside this weekly fair value gap? Now it becomes inversion. Continue down into here, reaching for our lower time frame or higher time frame objectives, weekly and monthly fair value gaps on the oil. Again, we talked about price legs. I think it seems to be the main idea, the thrust for today was these price lines or price legs. There's your price leg. From there to there, there to there. You wait for a break above market structure, fair value gap, which what we were talking about this morning, Kevin. We're in the morning anyway. We're talking about today, which was I want to see a body break this high. There's a body, and then a fair value gap to form above that high. There's the fair value gap forming above that high. Tap into it right there. It doesn't have to hit the high. It can, and it would be nice if it did, which would have been the top of that weekly fair value gap. But you want to see it come back. Your first entry is there, second, third entry, if you're doing 3 entries, and you're getting long. And there you have it. That's the example I was talking about on the lower time frame. This is daily. So if this was 1 minute candles, that's that break in structure I was talking to you about earlier. On the daily, exactly the same thing. Back to that whole rambling I was saying about what news event brought us back to here, what conversation, what boardroom analysis brought us right back to a precision opportunity to get long? Did somebody suddenly change their mind that, oh, let's continue to push price oil higher, or did the algo offer price back in for further upside? That's daily. Price leg. Gold. Never got our 35. That doesn't mean we won't get it next week. We've got small little wick candles here, so this is kind of like retail believes this is like a bull flag or bear flag happening here now. We could get this run back up and further support on a downside run where we've got plenty of pull on gold below this low here. We've got equal lows here. There's a pool of liquidity sitting down in here. We also have that monthly fair value gap. If we look at our monthly, that's the monthly fair value gap there below these lows. So we're looking for a further push down on gold into sweep these lows into this fair value gap on the daily. And do we continue pushing down into the next fair value gap below? We're definitely in a discount portion of the range, which for me, if the American dollar continues to push up, which is going to continue to push the S&P and all that down, gold is reflexive, is opposite to the American dollar. If the American dollar continues to push up, we're looking for further downside on gold. That's our next objective. We're already into the rejection block already, so on the monthly, we're looking for a push down in here. Which would be a great for seasonal tendency, for gold to reach your seasonal tendency October low. If this is the bottom, and they're going to keep this open as a breakaway gap, we come back into here, this remains a breakaway gap, and we push up. Or it comes to the top of it right here at 1765. So at least look into the 1700s, the high 17s. That right there is 1805, so the bottom half of the 1800s to the top half of the 1700s for gold. That's my call on that. Well, that thing turned out exactly as we had called it earlier in the tech. We wanted it to come back up above these old highs, run down into this guy here I was calling earlier, and precision. Has somebody been listening to us? Has somebody been listening to us? Are the markets reacting because we told it to? 62% retracement? Come on. Kevin, we're influencing the market, don't you think? We're influencing the market. We must be. Why are they doing exactly what we're telling them to do? Sorry, that's getting cocky now. We can't do that. We don't want to get cocky. It's just another reflection on the amazing standard that ICT has created in the market. He's created a level of education, a level of understanding that very few people. You deserve more viewers. Oh, bless your heart, Kevin. It'd be nice to be able to share this with other people. It would be great to have more people in here, but eventually, maybe, I'm trying to get the word out there. I'm trying to share it with LinkedIn and Facebook, and I've got 16 subscribers now. Woohoo! So if people pop in and see that the precision that we're calling here is even in an on-farm payroll week, when the markets are moving as they should algorithmically, without all the noise injecting liquidity into the market, and that as it moves from one array to the next array, if we practice, and again, I'm going to harp on this, close your eyes and just hit your little rolly button, come all the way back to a spot, and then start going through array, look for the array after array after array. Just keep clicking that one button and practicing where it's going to go. And I tell you, you do it on the 1 minute chart, the 10-minute chart, hour, it doesn't matter. It doesn't matter. It's all fractal. Look for breakouts, look for consolidations that occur. or fair value gaps that occur above a breakout that supports a run above old highs. This is the same thing we talked about just a minute ago. We have a break-in structure with a fair value gap. We come back inside it, and off we go. Boom, boom, boom. So consolidation, that's the thing we want to look for. Big bull candle that runs above it, right? With the fair value gap. Tag, tag, tag. Stop loss goes down below your low of your fair value gap. So you would have been squeezed. And then off you go. Anyway, that's the thing. I'm just here to share, man. I want people to see that this market reacts the way ICT teaches it. I recommend anybody who's coming in to watch this. ICT, you got ICT till November. Use them. Learn this stuff. It's amazing. And if you're like Kevin and you got yourself a setup that's your bread and butter setup that's going to earn you some money and make your family's life easier and make your life easier, then keep your trade setup. Don't try to venture into too much other stuff. Once you got your thing that you know works and is good for you, stick with it. And that's the thing where you, after a while, it should get boring. You should start to see this stuff all the time and say, oh, okay, I'm expecting this. I'm looking at a range, blah, blah, blah. You go through your analysis every single time. What PD array am I reaching for? And if you get your setup and you see it lining up, you say, I'm jumping in on this. You commit to it and then manage it accordingly. Whatever your proper management style is. And after you've hit a bunch of straight wins, start cutting your leverage. Like Michael says, eventually you're going to take a loss. So cut, cut, cut. Half, half, half until you take a loss. Then you can start inching it back up again if that's so. Away you go. But protect your money. Stick with your rules. And I'm glad, Kevin, I'm glad you're here, man. I appreciate you being turning up, even if it's just you and me and the occasional other person that pops in. I appreciate you turning up and listening to me babble away here. Hopefully you're getting something out of it. And yeah, I thank you very much for that, man. I appreciate it. I appreciate you turning up. And I might not be on Monday. Might be forced to work overtime. Ah, the days of overtime. Enjoy these, my friend. The days of overtime are coming to an end. So just enjoy it. Go to work and say, oh, I'm so exhausted. I have to remember this day. I have to remember the days I got so damn exhausted. Because when you're sitting on your boat, getting fat, drinking pina coladas or whatever the hell they're called. What is it? Pina coladas? I don't know. I can't even remember the name. I can't even pronounce the name properly. Anyway, you drink one of them fancy drinks, getting fat on the boat, looking back at the days where you were slogging away over an overtime call. Remember this. Remember this journey you're on, my friend, because you get to look back on this one day and smile to yourself and say, I made it. I did it. I did it for my family. I did it for myself. And if you can pay that forward and you can help other people out along the way, then to me, you've justified your existence. Pina colada. Thanks, man. No alcohol here. Good for you. They make pina colada mix. You don't have to put anything in it. You just stand there with your straw and your hat and all the little fruit and stuff hanging out of the side of the thing, making it look like it. Nobody knows. Never had a single job in 42 years of my life. Wow. Bless you, man. That's amazing. I can't say I've had that pleasure myself. So, yeah, good for you. Good for you. It's the devil's juice. You don't want that stuff. You'll be here tomorrow. Good. If we don't work overtime, Monday I'll be here. Yep. Excellent. And you know what? Mondays are just usually the observation day. Just kind of set up. See, Monday, I look at Monday as the wick day. Monday is usually the day of the week that is the wick of our candle. So if this is a weekly candle, Monday is usually that wick. So then I get the beef. They get the rest of it set up for the rest of the week. So Monday could be an observation day. So it's okay if you're playing hooky on Monday. I'm all right with that, brother. That's okay. You got to feed your family. So yeah, Tuesday will be a big punch day if we don't get it on Monday anyway. But tomorrow we're going to be watching the non-farm payroll, and watching non-farm payroll, and then because I've been in this for a while, I want to see if I can paper trade a non-farm payroll event, a news event, and we will drop our imaginary line in tomorrow for our entry, just to trade a non-farm payroll event. Not that you should trade non-farm payroll. If you have no idea what you're doing in there, stay out of it. I got an idea. I wouldn't say I'm a professional non-farm payroll trader. It's not for professionals, so tomorrow's just an experiment. We do not trade money tomorrow. It's all paper stuff, and I'm playing in the market. I'm observing, and I'm just I'm going to put some curiosity lines in here as, okay, if this was my entry, this is where I'm exiting. And we're going to try some stuff out tomorrow. So that'll be our show for today. And we got our objectives once again that we're looking for. So that is in itself on a tech, just so you know, if we're running these old highs here, if you ran that and took your short into my little box that I was putting here, that's 224 handles. Hello, have a nice day. With that, we'll close that up, and thanks so much for coming in again, Kevin. And again, man, congratulations on your funded account. Bless you, man. I think I'm so excited for you. Excellent, excellent. And we will see you tomorrow. And thanks everybody else who's popping in to look at my stream after the fact. I'll see you live tomorrow. And have a great day, and be safe out there. Share the wealth if you got it. And stop the hate, man. Stop the hate. Love our fellow man. We're all in this together. Thanks for Mike again for turning up, and we'll talk to you again tomorrow. Kevin, bless you, man. Take care.